Hey everyone, it is Evan here from the Trade Risk on Friday, December 13th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our dashboard here. You can see on Friday, the close for the major indices, mostly quiet, mostly flat. The Russell was the only negative closing index here. The Qs a little more firmly in the green. Dow and S&P 500 basically flat. You can see though the 5-day change numbers, so the weekly performance here now nice and strong, positive to the upside. Dow Jones really getting some outperformance this week, up nearly 2%. We are back above all of the simple moving averages, key simple moving averages in the major indices. Now if we scroll down and take a look at sector performance, semiconductors out in front with the lead, breaking out to new all-time highs, surging to new all-time highs, followed by technology and consumer discretionary, which is an interesting one that we're going to talk about later in this video. On the downside, it was the more defensive tone to the markets, staples, utilities, and healthcare. Now, in terms of major markets, disregard this VIX value not coming through right now. Just a slight data issue there going on. This actually was one of the worst underperforming for this week. So on the upside, it was Chinese markets, emerging markets, and silver. And on the downside, it was VIX, it was natural gas, and it was the US dollar. So let's jump into the charts here. Lots to talk about. So now the backdrop for this week, or some of the catalysts for this week, is we had the Fed announcement that was highly anticipated this Wednesday. Market getting through that, continuing to push higher or closing higher through it. And then, of course, later in the week, we had, certainly what ended up being sort of maybe a backward backing off of some of those stronger headlines of at least the phase one trade deal coming to terms here, the U.S. and China. Later in the week, little bit of cloudy, kind of remarks following that up. Regardless, those were the two big catalysts that we kind of had on the radar that we mentioned in the last couple of videos. Market got some more clarity about them. And of course, we see the price action here resolving to the upside. Positive reaction and essentially continuing this trend higher. So when we look here at the S&P 500, we closed at new weekly all-time highs, 75 basis points to the upside. And really now what we have is a follow-through week to last week's reversal, right? So if we look and we isolate last week's candle here, and again, I should mention this is the weekly chart of the S&P 500. We're looking at the cash market. But if we look at last week's action here, you could see this big tail at the bottom that came all the way down to about 3,070 in the S&P 500. And at the end of the week, buyers stepped in and bid us off of those low levels. We closed back here up into the green, just marginally so. And when we, had the discussion last week, we effectively talked about using the highs here, 3150, as the upper sort of goalpost line in the sand to see if this market can, in fact, break out, can resolve higher, can continue from the late bidding of the bulls last week. And we did, in fact, get that. It took a couple of days to firm ourselves up because we came into this week with a slight gap lower. Tuesday was more kind of choppy, indecisive action. Wednesday, kind of the same, but started to push higher. And then Thursday was kind of the explosion here to new highs as we pushed through resistance. And again, we closed up here in the upper end of the range, not quite at the all-time highs or the intra-week highs. So as it stands now, when we look here at the S&P 500, we continue to march higher in this uptrend, extending to new all-time highs. We have another kind of upper level now to use, line in the sand, if you will. That's what we like to always kind of measure against. and sort of measure our risk against and plan exposure against. And for the S&P 500, if you're a short-term active trader now, you could use Tuesday's lows, which would come in around 31.30, or really that's the kind of the closing level. If you want to come down here to about 31.25 or so, that is Tuesday's lows. You could use that as kind of your upper level, higher low line in the sand to keep the trend, to keep the momentum as pent up and as strong as possible here in the short term. So that's a level we can now use. Otherwise, we have the highs that we just broke out from, which really come in closer to about 31.53. If you're really short term and you want to see this momentum just stay as pent up as possible, we want to see this market then hold above the breakout level of 31.53 into next week. So those are some new kind of risk levels to use. On the upside, of course, there's no closing, there's no overhead supply here. This is all-time highs. Of course, you have the intraday highs made here on Friday, but there's no major overhead supply or levels to contend with. We are making new highs here in the S&P 500. So that's the landscape. Bullish developments, weekly follow through, and basically a resolve higher following up the Fed and some of those at least trade discussions, getting some clarity there. Now, if we look at the Russell 2000 this week, here is maybe where we take a little bit of hesitation. We don't do a full victory lap because the Russell 2000, which had recently been acting as the sort of outperformer, the relative strength index, and this is home to the mostly to small cap stocks, did hesitate a little bit more this week than some of the other major indices. You can see it did close in the green. It was up about 28 basis points here this week, but a more convincing tail at the top end of this week's range, and we didn't quite have such a strong reversal over, or I'm sorry, not a reversal, but we didn't have such strong follow through over last week's highs. You can see it was a much more marginal kind of contained week with a little bit of pessimism here given indication by the tail at the top end of this weekly candle. So something to at least make note of when we look here at the daily chart of the Russell 2000. The big level, the big takeaway here is that we are still holding above the 160 breakout zone that we broke out from several weeks ago now, and that is a intermediate term, longer term constructive piece of price action there in development, is that the Russell is holding above that bigger breakout level. So again, depends on your time frame. This here, and looking at this kind of weekly indecision here, might be just noise in the grand scheme of things, because we are again holding above some good technical structure here for the Russell 2000. So it depends on your time frame, but again, let's see again if we want to use kind of an upper level new risk level 162, which is approximately this week's lows. That's where you'd want to see the Russell continue to hold above next week to keep it as bullish and sort of pent up as possible here, and keeping that momentum alive to the upside. Going to the NASDAQ 100. You can see we also closed good volume coming in here, breaking and surging through to new all-time closing highs. We go to weekly chart. You can see again you had that big tail last week, the big reversal off of those lows, getting weekly confirmation now, follow through to the upside, new weekly closing highs here, looking good for the bull case as well. Now, the only other thing I wanted to make mention of is the VIX. We can see the VIX, which actually is closing back down into the 12s now, kind of giving it all back here into the end of the week, getting back down to not quite as low as it was back at the end of November, which was below 12, but quite low, and basically at the year-to-date lows. One thing that is interesting here is if we look at effectively the volatility of volatility, in other words, the demand for VIX, the demand for those options, you can see that the VVIX here is making, basically higher lows in here. It's actually holding up. It's not diving lower like the VIX is. You can see it's actually well off of the levels here, and don't want to proclaim to be an expert here on the VIX analysis. It is something I look at and pay attention to when there's sort of disagreement between what the VIX is doing and what VIX is doing. But you can see basically it is certainly shedding here into the end of the week, but it's still well off of kind of the levels it was back when the actual VIX was trading much lower. So something of interest there. Again, something to keep an eye on and do some research on if you're interested in those indicators in the sort of second derivatives VIX. So with that, let's jump into some other major markets here. We'll go to TLT next. TLT here on the week was higher, about 0.5%. So again, we had an equity market rally along with bonds, long end bonds anyway. I guess all over the curve, I think. Yeah, so even just the aggregate was up as well. But TLT positive this week, not getting its follow through lower, right? So the S&P 500, if we look on that weekly chart, again, we had that reversal. We got the weekly follow through to the upside. We go to TLT here. That had kind of that negative sell-off here, falling last week down 1.5%, but it did not get downside follow through. It kind of held in here. So a little bit of kind of a disagreement there, but TLT working itself up and pretty much still range bound. Nothing really technically changed this week except for the short-term hold in the TLT. So if we go to metals next, we look at GLD here, also positive this week, 1% to the upside, still more or less in the same sideways 5-week range that it's been in since the start of November, but it is constructive to see it closing up 1% to the upper end of the range. Again, we'd like to see some follow through here to get the gold bulls kind of back in action. If we look at silver here also seeing some nice performance, 2%, reclaiming last week's new lows here that it started to roll over last week. Looked a little suspect, looked vulnerable for that bearish momentum to continue, but we saw the flip here this week. We saw the stand by the bulls, and we got a nice close and reversal of last week's action. When we go to energy market, we look at USO here, continued higher, 1.38%. You can see we still now are kind of bumping up against this trend line here. This, you could call it a few different things, but effectively the upper end of this trend line. If we go down to a daily chart, you can see where this is in relative. It's above this $12 horizontal level where there was a lot of previous supply, but it is, continuing to hold up after this gap up on the 4th of December. Bulls continuing to keep this alive. MACD here in momentum is pushing into firmly positive territory and leading with some of that price action. So life looking good there for oil bulls. And last but not least, if we look at natural gas here, it was down 2%, but it was much better than the open from the week where it was down about 6%. If we go back down to the daily chart here for natural gas, again, fairly ominous looking price action here because we essentially are having, or what looks to be, potential kind of bear flag here in the context of a downtrend on basically all higher time frames. So we do have to be careful here, but again, a much better sort of close than certainly where it opened on the week, but really we need to get above $18. That's essentially my line in the sand here for natural gas. I think we mentioned it in last video. If we can get back above 18, get a weekly close above it, maybe several weekly closes above it, maybe that's something we can start to hang our hat on again, but we've got to be careful here for natural gas just because of the dominant trend to the downside. So that's it. That's what we got going on there for the majors. Let's go to some of the sectors now. Let's take a look at what helped fuel this market, and it was semiconductors for sure this week. They did take a breather. Remember the last couple of videos, last 2 weeks or so, they started to stagnate, pull back a little bit in here, sort of take their time, catch their breath, but they came back strong this week. We saw 4.38% to the upside, quite extended here, in the very short terms, basically been a straight line move of 10% in about 8 sessions from the lows here back on the 3rd to where we're currently trading. So it's extended here in the short term, but certainly the trend is making new highs here, looking good for semiconductors. So bulls doing victory lap there. Technology also kind of outperforming here this week. It was number 2, up almost 2% on the week. XLK breaking out to new highs, good volume coming in. Again, this took a little bit of a breather here over the past couple of weeks in this kind of sideways consolidation, but it is off to making new highs there in tech, helping lead and extend this market to the upside. Now XLY is number 3 here, and this is the consumer discretionary ETF, and I think this is actually pretty interesting here because this is a sector of the market that has been stagnating, that has been going nowhere for quite a long period of time. If we look here at the weekly chart for XLY, it's basically gone nowhere since, you could argue, May, but certainly July of this year. It's been underneath this $124 level. It's still, certainly in the context of an uptrend here, but it hasn't been, breaking to new all-time highs over the past several months like a lot of the other sectors of this market have been doing. So with XLY now getting its highest weekly close going back to September of this year and basically the upper end of this range, I think it's at a point where you want to pay attention to it because there's a lot of sideways energy. There's a lot of kind of fuel and pent up, traders in this general zone. And if we can start to get a follow through week here and start to lift above 124 and then eventually, pretty much 124.50, it's a lot of clear skies above it. So I would pay attention to consumer discretionary. Could be a nice rotational, fresh breakout candidate into the new year. Now on the downside, staples here, underperforming this week, but really not saying much. It was still positive, still trading at new all-time highs. So things look pretty good there. XLU, not quite at all-time highs. Remember, it did have this this tough week here at the start of November, where it came all the way back down to 61.50 or so. It pushed off of those lows. It's kind of just going sideways here. Looks mostly content with maybe just moving sideways and taking its time here. So XLU, nothing too interesting there one way or the other. And then healthcare also, again, underperforming on the week, but certainly look where it's come from. It basically has had 12 weeks of nonstop action, of nonstop advancements. Even this week it was still up on the week, so it certainly deserves a rest. It's basically been as close to a straight line as you can get over the past 2 months of trading. So XLV deserves a rest, and we'll see maybe if it can continue to move sideways or cool off here into the next few weeks. So that's it. That's the recap here for this week. Lots of headlines, lots of catalysts to get through, but the market continues to just stretch to the upside here. Got a couple of weeks left into before the new year. So for now, bulls continuing to do their victory lap and extending those gains, and this market's putting in a very strong year from a historical basis as well. So that's it for me. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll be back here on Tuesday for the midweek market recap video.